Welcome, everybody. Thank you for joining us today. We are broadcasting live from Park City, Utah, which I will again say it's hard for me to leave. We're enjoying it here tremendously. Thank you for everybody joining in today, and as you have in the past, and supporting Family Office Insights and our presenters. Super appreciate it. You guys have been awesome. As usual, some Zoom housekeeping. We can't see or hear you, but we welcome and encourage all your questions through the chat box and the Q&A. And we've, as usual, we have quite a few people coming on today, so we'll get to as many as we can, but don't feel like you can't put them in when they come to mind. We'll be monitoring the chat box and the Q&A, and we'll get to as many questions as possible. For the record, we're going to be recording this and posting it on the Family Office Insights YouTube channel, I think, if it's okay with you guys. Both Jose and I actually had a really quick lunch because I raced out of Puerto Rico having planned to be there for 4 or 5 days, and I ended up being there too. And so I've had the opportunity to be there recently. So Jose's in Puerto Rico now, and Marcelo is in New Jersey. And so we welcome them and thank you for being here. Again, we encourage you to ask questions as you see the presentation. We also encourage you, if there's others that you know that might benefit from knowing what you've learned today, we're going to make sure everybody gets in touch directly with Jose and Marcelo. And please feel free to share it with your colleagues and other people that might be interested in chatting to them about the fund in Puerto Rico. So with that, again, thank you all for being here. You're so supportive of Family Office Insights, and we super appreciate it. So Jose, take it away. Thank you for being here, guys.
Well, Arthur, first of all, thank you for hosting us. We're very excited to be able to share with as many people what we're doing here in Puerto Rico. I'll just start by saying that I'm originally from Puerto Rico, but I spent the last 35 years, with my education and professional career outside of Puerto Rico, and returned back to Puerto Rico almost 3 years ago. So this is extremely exciting for me. It's extremely personal. So we're very looking forward to sharing all that we're doing here. With me, I have Marcelo Salas, who recently joined me at the end of last year to lead our investor relations efforts. And I met him actually in Puerto Rico about 5 years ago. So I'll let him, when he introduces himself, tell how we met and why he joined us. But basically, we're here to talk about what Monjur Capital is doing in Puerto Rico and how we're using the Puerto Rico Opportunity Zone Fund, a private equity fund focused on opportunity zones, to hopefully invest in the future of Puerto Rico. So with that in mind, I'm going to let Marcelo introduce himself, start the presentation. We do have some transition slides, at which point I think we can ask questions. Arthur can interrupt anytime that he wants, and we can definitely focus on the areas that people in the webinar are more interested in. So with that, Marcelo, please take it away.
Thanks, Jose. Hello, everybody. Again, my name is Marcelo Salas. It's a pleasure to be here presenting the opportunity we have with PRAZ, the Puerto Rico Opportunity Zone Fund. And brief background, as Jose mentioned, he and I met about 5 years ago. I was working for a company called JTC Group. I spent 5 years with them building out the country's leading platform for back office and compliance solutions for specialized private equity funds. Of course, I worked closely with Jose throughout that time as he was structuring PRAZ, and spent a lot of time in Puerto Rico working with different fund groups and investors throughout the island, and really was very impressed with all of the dynamics of Puerto Rico in general. And I was very impressed with Jose and his team and his background. So when I left JTC and Jose approached me, I think it was a very easy decision to say yes, to come and join the efforts to help with the PRAZ initiative in Puerto Rico. So yeah, and beyond that, I spent the past 20 years in various capacities, raised capital for a large asset management company in New York, worked with a number of startups, helping guide them successfully through exit over the years before I joined JTC. So that's a little bit about myself and my background. And, we're very happy to be here. So we're going to walk you through a presentation we've prepared. And Jose, do you want to move forward so we can kind of talk a little bit about the agenda? And first off, sorry, the disclaimer here, just so you know, obviously, we'll share this presentation with you so you can read through the details here. But in short, it's not a solicitation or offering. We'll be just talking about the construct of our fund today. And to walk you through the outline of what we will be discussing, obviously, we're going to provide a quick introduction to the company. We'll be discussing an overview about the opportunity and details of Puerto Rico. Then we'll share some more detailed views about the fund. We'll talk about the investments and the pipeline ahead. And then towards the end, if anyone has more questions, we have a deeper dive into opportunity zones. So we'll be happy to take any questions at the end regarding specifics about the opportunity zone program. So the success of any company, any endeavor begins with culture and the values that we hold. Here we believe in building back a cleaner, brighter, and more resilient Puerto Rico. We believe in investing in sustainable businesses, clean energy, and infrastructure. And we feel that it's the gateway to achieve our goals. We also believe that a disciplined ESG investment strategy will drive the economic growth and make the positive impact to the environment, improve the quality of life for residents of Puerto Rico. So a little bit about Monyor Capital. They are the general partner and manager of the fund. It was founded in 2018 as an alternative investment manager and advisory firm. And the MCP team brings together a very unique skill set, combining global experience, local presence in Puerto Rico, expertise, and strong relationships throughout the island. As you know, Jose Torres is the founder and managing partner of the manager, as well as the fund. And, he is a very seasoned private equity investor. Jose, do you want to walk people through your background a bit further?
Sure. Thank you, Marcelo. So I'll just go a little bit more in depth about my career so you guys can understand how I ended up here in Puerto Rico and starting the Monyor Capital Partners and the fund. I started my career after grad school with ING. I actually started working with ING in Santiago, Chile. That was a great experience. It was right after Pinochet gave power and the first elected democratic president of Chile. So there was a lot of dynamic and a lot of investments. Our focus there was telecommunication, energy, and mining. All of those were, the first two were privatized in Chile way before the US. So there was a lot of investments, a lot of US and European companies in Santiago, Chile. Then with ING, I moved to New York. I was there and I focused basically on investment banking in the energy sector. And when we talk energy, we tend to talk more about power and infrastructure than oil and gas. So from my perspective, we really have been in the business of energy infrastructure. From there, I had an opportunity to move to CoBank in Denver. That was a very interesting scenario where it's a quasi-government bank, but their mandate was really to advance capital to deploy in telecommunication, energy, and agriculture throughout the US. So it's a little bit of, if you think about it, how ESG really runs. And it started all from my perspective when I joined CoBank on how there was a very specific mandate of what the bank was trying to do. Then I have an opportunity, one of our clients approached me to ask me to come and work for them. It was Energy Investor Funds. I was very flattered, but I told them I don't really want to move back to New York. I liked where I'm in Denver. And they gave me an opportunity to actually move to San Francisco and lead a new team, basically leading an investment team in the West Coast. That was very interesting to me. So I moved to San Francisco. And that's where I spent basically the last 13 years before moving back to Puerto Rico. When I was at EIF, we were basically starting a lot of the renewable energy back in San Francisco, and I got the opportunity to do that early on. And then about 5 years ago, Ares Management, very large, over $120 billion of assets under management, publicly traded, acquire EIF. That was a great experience and opportunity. But the reason that I'm in Puerto Rico now is because as the things got tougher in Puerto Rico, after the hurricane, after the bankruptcy process started in Puerto Rico, Ares and many of the other investors decided to actually pull away. Frankly, when you have the opportunity to invest across the world, you start looking at opportunities and decide, which ones do you have the better chance of succeeding. From my perspective, that was a wrong view. I actually believe the opportunities in Puerto Rico were in the right transition. Basically, and we'll go through this presentation, Puerto Rico, although it was going through a transition of the hurricane that hit Puerto Rico, and there's infrastructure that needs to be replaced. There's also the bankruptcy process, which luckily it's going through the end of that process right now. But ultimately, it has an opportunity to transform itself, and that's why we're here. Puerto Rico has an opportunity to rebuild itself in a better fashion than what it was before. So with that, I'll kind of keep going on the presentation, and later we can talk a little bit more. But from my perspective, we feel very comfortable that we have the experience. We feel very comfortable that we have the local presence and the local experience and expertise to drive this business forward. So
Jose, let me just say for the group, we didn't do this on purpose, but there's construction going on in Jose's building, and let's just say it's an opportunity zone in play.
And frankly, thank you, Arthur, for mentioning that. I apologize. It started actually probably 15 minutes ago, so I didn't even get a heads up to move. But actually, also the thing that might happen, and it happens every day, is if the power goes out, I'll try to go into my iPad and try to log back in. It's a fact of life in Puerto Rico, the power going out. But going about the executive summary, what I wanted to just highlight are some of the key themes that we're going to be talking about. I don't want to talk about the bad things about Puerto Rico. We can talk about the challenges. We can talk about the hurricanes, but we're really to talk about the opportunities. Puerto Rico right now is expected to receive over $76 billion from the federal government in order to fix its infrastructure. At the same time, Puerto Rico has a very attractive situation with the opportunity zones. That's a legislation that came out in 2007 through the Tax Cuts and Jobs Act. And what that does is it designates low-income census tracts to be able to receive money from investors that have capital gains and give them a special tax treatment. And we'll talk a little bit about that, and we're trying to take advantage of that and pass that to our investors. Over 95% of Puerto Rico qualifies an opportunity zone, and that's very different than the rest of the US. And that will provide some incremental benefits to invest in renewable energy and operating business, which will be much harder to do in the US.
So I'm sorry, Jose, that's super interesting because we talked a little bit about that by definition, the entire island is an opportunity zone, which is super cool. What isn't? Is it like public lands that represents the 5%?
So yeah, actually it's not even public land. It's because there's no census, it's census tracts. And because there's no people living on them, some of them were more than public land. They used to be owned by the US government and Army base. And because there's no one there, it didn't qualify. Totally. The other few places are where the income of the areas, which is basically Dorado and Rio Grande, it's above the census tract, so you cannot qualify. Puerto Rico has tried to get 100% to qualify, and I kind of tell them, until we can't really get the program going, don't spend your efforts on trying to get that 5%. If we are successful and we can do a lot with the 95% we have, I'm sure that we'll get that extra 5% if necessary.
95 sounds like more than enough, right?
Yeah. In terms of focus, we're very, specific about what we're trying to achieve. And we're going to be investing in sustainable businesses, clean energy, and infrastructure. And that is our goal. But more than that, we're going to be doing that with an ESG strategy, which always looks at what is the benefit to the people of Puerto Rico. There's a lot of policies in Puerto Rico that are aligned with what we're trying to do. One of the main ones is Act 17 of 2019. And that requires Puerto Rico to start generating 100% of the energy and electricity from renewable energy by 2050. I always say, even if we only get to 20 or 50%, that's going to be a huge difference. We're right now at less than 3%. We have the experience, as we mentioned on the previous slide, to be able to execute on this strategy. And then Puerto Rico also has tax incentives. Everybody has heard about Act 20, Act 22, but in reality, all of them now fall under Act 60. We'll talk a little bit about that later and how some of the businesses that we're investing in can benefit from that, and how some of the investors can also benefit from that. In addition to that, there's always the tax benefit from the opportunity zones that we will talk about. And then what we're really looking for are investors that are aligned with our thesis and that will be willing to join us in trying to make a difference for Puerto Rico without sacrificing returns. Obviously, we're a private equity fund, we're an impact investment fund, we're ESG fund, but at the end of the day, we're looking for acceptable returns for our investors. The way we describe ourselves is as the first qualified opportunity fund that is focused on ESG investing in Puerto Rico. So I don't know if there's any questions right now, or we can go and move towards the opportunities.
There is
how
one
we see them.
that I think that you might be getting to, but let me just submit it and see if you want to handle it now or later. So Brad is asking and saying, thank you for the presentation. How are you intending to return funds to the mainland US investors after 10 years without triggering GLTY tax for these investors, which would result in the Oz benefits being diminished or eliminated?
Yep, and I will go through that a little bit when we talk about the fund structure. It's a good question, but the simple answer is we're planning to reinvest all the capital as much as possible, staying in compliance with the opportunity zone legislation. And we're going to be taxed as a corporation. We're a Delaware partnership, but discussing one of the issues of potential tax implications during the 10-year hold period, we decided to be taxed as a corporation. But the structure is fairly simple. The structure is we will be buying back those shares, creating a capital gain. And those investors that invested eligible capital gains should be able to benefit on the gain with zero capital gains tax. And we do have a couple of advisors, including Grant Thornton here, which were part of the team that put this strategy together. So if you're interested in specific details, we can bring them on board in a one-on-one call.
Great, thank you, Jose.
So I'm just going to go a little bit and just go into more detail about how we see the opportunity and how we're going to go about going after the opportunity. And the first one was trying to put a structure that would address that. And that is what the Puerto Rico Opportunity Zone Fund does. It's a private equity, long-term investing in infrastructure, renewable energy and operating businesses. We plan to invest through an ESG strategy. Everybody talks about ESG, it's kind of a buzzword, but we really mean it and believe it. From our perspective, everything we do, we're going to see the impact on the environment having a positive impact. We're going to see the impact on the people of Puerto Rico. And those are two things that I think are driving each investment that we do. And we'll show how the first two investments that we've made address those two issues. From the governance side, we're going to be fully transparent with our investors. And we're always going to be looking at how our investments, again, impact the people of Puerto Rico. We have an advisory board committee that will be comprised of our limited partners, and we look for them and we'll look for them to have an input on all of the major decisions that the fund will have going forward. And then we're very focused on Puerto Rico. We're investing only in Puerto Rico. And one of the reasons for that, I'll go in more detail later, but for Puerto Rican investors to be able to actually get the opportunity zone benefits under the local tax jurisdiction of Puerto Rico, a fund can only invest in Puerto Rico. So an investor from Puerto Rico investing in an opportunity zone fund that invests outside of Puerto Rico will not be able to get the Puerto Rico opportunity zone tax incentives. Then the impact side of it, again, is not that we're going to be doing things that will decrease our returns, is that we're going to be doing things that make a change for the people of Puerto Rico. And then the opportunity zone angle is just something that we are able to structure and allow to pass those benefits, mainly because Puerto Rico, all of it qualifies, but also because the businesses that we're going to be investing in and where the money is going would also qualify under the opportunity zone law and legislation. The other thing that we always talk about, if you've seen other presentations on opportunity zones, is that most of it is real estate. It's real estate because it's easier to qualify, right? You have an asset you can show that is in a fund, in a zone that is an opportunity zone, and you can show that the people that are working there and that the money is being done in that zone. Where in Puerto Rico, that is not the case. There's a lot of people already investing in real estate in Puerto Rico as opportunity zones as well. But I think our differentiator is that we're going to be going after things that are outside of regular commercial and residential real estate. So why Puerto Rico? I mean, a lot of people ask me, why Puerto Rico? And the first thing I say is a huge economy. When you put Puerto Rico into perspective, we're talking about more than 3 million people, US citizens. We're talking about a GDP of over $100 billion. So it's not a small economy. So there's plenty of opportunity and there's plenty of need. We already talked about the fact that there's $100 billion of infrastructure to rebuild. So that's not depending on GDP growth, that's really replacing infrastructure that needs to be replaced. In addition, Puerto Rico has a great labor force. Some of the best engineers in the US come from the universities of Puerto Rico. So the labor force here, besides being bilingual, is also very well educated. I also talk to people about Puerto Rico from a strategic location, but it's more than just the fact that we are, from a logistics perspective, we're actually a bridge to Europe, Latin America, and the US, both from a cultural perspective and not just from a physical location perspective. And that's key because it actually brings a lot of companies in Puerto Rico that are investing in Puerto Rico, which we can partner up with and we can invest in. And then from here, they're doing basically exporting or growing their business out of Puerto Rico. And frankly, the other key issue is that Puerto Rico is a US jurisdiction. Although the tax, we talk about that later, is different. The taxation in Puerto Rico from a currency perspective and from a law perspective, it's like being in the United States. So that helps mitigate some of the issues of going to other places in Latin America. We talked about incentives, and that's key. A lot of people that have heard about Puerto Rico has heard about Puerto Rico because of the tax incentive program that Puerto Rico has. And then the last angle I would say is the opportunity zone angle. That's something that is unique for Puerto Rico because all of Puerto Rico pretty much qualifies versus small census tracts in the US. So a very quick highlight on opportunity zones. And basically this law, like we mentioned, was from the Tax Cuts and Jobs Act of 2017. In reality, it's 2018. I believe it was December, at the end of December. And then it took about a year before the IRS and the Treasury issued guidance. So this program really didn't get started until 2019. So a lot of people are hearing about this for the first time last year and this year. And in the case of Puerto Rico had to pass its own law that only passed in 2019. And the guidance of that law by the Puerto Rico Treasury only came out at the end of 2020. So why is our fund only starting in 2021? One of the reasons was that there was no legislation in Puerto Rico that will make it clear on how an opportunity zone fund works and how we could actually pass this benefit not only to Puerto Rican investors, but also to US investors. There's basically, and here you can see that there's over 8,500 census tracts that qualify for this tax treatment. And 95% or plus more than 95% of Puerto Rico falls under that designation. There's basically three benefits that an investor can get from investing in a qualified opportunity fund. Basically, you need to invest capital gains, and those capital gains need to be invested 180 days from the time that you generated that gain. And it could be, I say you, but it's basically the individual or the company or corporation that generated that gain and that files it under their tax returns that is eligible to reinvest that capital. One of these benefits, the smallest one, actually is no longer available, and that's the middle one that you see here, which was a 5% step up in basis. Sorry, a 10% step up in basis. But the two most beneficial tax treatments and incentives are, first, that you get to defer your capital gain payment, tax payment, until your tax year 2026. So you're not going to pay your tax liability on your capital gain until sometime in 2027. I always like to explain this as getting a free loan from the US government or the Puerto Rico government at 0% interest. So you're going to be able to invest that capital instead of paying it to the government. And then in 2027, at some point, you will pay that tax liability. You'll pay that tax liability at the tax rate at that time. So everybody is concerned that there will be an increase in capital gains. On the other hand, if that is the case, then the most important benefit here actually becomes more valuable. The main benefit why people do invest in qualified opportunity funds is so that at the end of 10 years, all of your capital appreciation after your 10-year hold period, you will be able to be 100% tax exempt. Basically, at the end of the 10-year hold period, when you sell your shares in the fund or the limited partnerships in the fund, you will be able to take all of those profits without paying capital gains taxes.
Jose, is it fair to say that the legislation that you're waiting for now exists in Puerto Rico? Does it mirror the legislation in the US? So it fits well with what the intent was?
Yes, so I have a slide at the end that we can use as reference later, but I think for purpose of this discussion early on, yes, what the law did, it did two things. One, it made it clear that a US investor will not pay Puerto Rico capital gains once they sell, which was very important. And two, it allowed Puerto Rico investors and Puerto Rico residents to get the same tax treatment as a US investor does with the IRS, with the local Hacienda, which is the Puerto Rico version of the IRS. So the Internal Revenue Code of Puerto Rico simply adopted the Internal Revenue Code of the US for purpose of the opportunity zone legislation, but they made one big change, that for a Puerto Rican to take advantage of those tax treatment, that the fund that they invest had to only invest in Puerto Rico. And that's basically the main issue that comes about the Puerto Rico law, which actually makes sense. Basically, they're saying if we're going to give you a tax incentive, we want that those monies are invested in Puerto Rico.
Yeah, totally makes sense. Great, thank you.
So we'll talk briefly about Puerto Rico. We're not going to do a deep dive. We just wanted to highlight some of the key key things, metrics that people should be aware and how that might impact your decision of investing in Puerto Rico through our fund or just investing in Puerto Rico or moving to Puerto Rico. I think the first thing is that the status of Puerto Rico is a Commonwealth. And basically, Puerto Ricans are US citizens. We have our own government, but Puerto Ricans cannot vote in the US election unless you're a resident of a state in the US. I would say that those are the main differences. We do get certain benefits from the federal government. We don't get all of them. So there's a difference of being a Commonwealth and being a state. One of the things that people are very passionate in Puerto Rico is that we can go to the Olympics. We have an Olympic team, which being a state, you cannot. That might be a funny thing, but that has been an issue for Puerto Rico when it comes to voting for becoming a state. The same thing about the language. In Puerto Rico, the official language is both Spanish and English, and there's concern that being a state, the official language will have to be English. In terms of Puerto Rico and the GDP of Puerto Rico, you can see on this chart that about half of it comes from manufacturing. And that's significant because what you are seeing is a sector in which we can invest and can achieve a lot of the things that we're looking for, and is a growing sector. A lot of companies, although there was a max exodus about 5 to 10 years ago when one of the laws, the 936 law changed, people are now looking at Puerto Rico beyond just that law and are looking at the current tax incentives and also the labor force. There's a big pharma manufacturing community here in Puerto Rico, and that's going to be something that you'll see growing. In terms of the other item that we should highlight in Puerto Rico is that Puerto Rico is going through a bankruptcy process because Puerto Rico, as a Commonwealth, they had to put a new law for that to happen, and that's the PROMESA law. And that law basically allows Puerto Rico to go through a bankruptcy process. And it also put in place a financial fiscal board. The FOMB is basically the one that governs and approves anything that fiscal that Puerto Rico is doing, and also represent Puerto Rico and the instrumentalities of Puerto Rico in the bankruptcy process. Wanted to talk a little bit about the energy sector in Puerto Rico because that's a big part of our thesis, and also not only from an investment perspective, but also something that will help Puerto Rico in the long term. When you look at Puerto Rico, we don't have any fossil fuels. We import everything that we consume, so that makes it expensive. Puerto Rico right now has a very high rate for energy. If you look at these rates here, the 22 cents for residential, 33 for commercial, and 25 for industrial. I think that 33, it's government data, but it probably has to do with some specific thing that happened over the last 12 months. They keep updating this. But the main issue that I want people to understand is that this is while the utility is not paying any debt. Actually, they're expecting that by the end of 2025, the average price for residential in Puerto Rico will be 30 cents a kilowatt hour once the utilities start paying its debt service. If you look at that and you compare it to the US, it's way more than 2 times the average. So that's something that needs to change in Puerto Rico. It needs to change for the economy. It needs to change for the people of Puerto Rico. And that's part of why we're here. And we'll talk about how we expect to take part of that transition. As you can see here, Puerto Rico right now is generating less than 3% of its electricity from renewable energy. But here's what's happening. There is a very advantageous policy that has taken shape in Puerto Rico. And in 2019, Puerto Rico passed what they call Act 17. What this does, it basically created the framework for Puerto Rico to move from fossil fuel to renewable energy. It also created the framework for the state-owned utility to be broken up. And the first step of that was actually putting the transmission and distribution on the hands of a private operator under a 15-year contract. That became effective last July. The second stage of that is to sell or to put in the hands of the private operator, the historical generation owned by the utility. And then the third stage is really moving to renewable. The targets are 40% by 2025, 60% by 2040, and 100% by 2050. From our perspective and from an investment underwriting perspective, it doesn't matter if we get to 100%. Just getting to 20 or 50% will make a huge change for Puerto Rico, and it would have plenty of investment opportunities from the private sector. One highlight too is that there's currently a coal plant in Puerto Rico, and it's relatively clean for a coal plant, and it's actually the cheapest source of generation. By law, that has to be decommissioned by the beginning of 2028. So 18% of the existing generation, which is the cheapest, also needs to be decommissioned by law. So that will, just for that, we will have to have renewables to replace that. And we can't, finish a section on Puerto Rico without talking about tax incentives. Puerto Rico recently passed what they call Act 60, also in 2019. And what this did is they put all of our tax incentives in Puerto Rico under one code. Basically one act now, anybody that talks about a tax incentive now, they call it Act 60, and there's different categories under that act for tax incentives. From our perspective and for our investment strategy, the most important ones are the ones that are going to be applicable directly to the companies that we invest. There's one for renewable energy, there's one for manufacturing, there's one for agriculture. So when you look at those companies themselves will apply and will receive what they call a tax decree. Under that tax decree, the main benefits are a 4% income tax for any eligible income, basically exemption from municipal 50% from municipal taxes, and 100% exemption for distribution. So making distributions from these companies, we will not have to withhold taxes at the Puerto Rico level. And there's also some property tax exemptions. So at this stage, I was going to pass it over to Marcelo to go over the fund details unless someone has questions to cover.
There's a question. It's a little detailed, but I'm going to mention it, and then you can decide whether you want to handle it later or offline. So it's relating to the same issue of the last question. If one is a Puerto Rico-based investor, then the sale of the shares in the QOF back to the company would result in no capital gains on the sale after 10 years. That said, if your view from discussions with Grant Thornton that the U.S. mainland investor who invests into the shares of your QOF can also get the Oz treatment after 10 years on sale, and there is no capital gain in the sale of the U.S. mainland investor.
Correct. And again, the way that the capital gains tax works is based on your location. So if you're a U.S. investor, you'll pay capital gains at the IRS U.S. level. And if you're a Puerto Rican investor, you pay capital gains, regardless of whether your shares are in a company in the U.S. So every Puerto Rican investor that invests in Apple stock, when they sell the shares and have a capital gain, they'll pay their taxes based on the capital gains taxes under Puerto Rican tax. So both Puerto Rico and the US under the tax code is what gives each of those two different investors their tax treatment. So basically the Puerto Rican investor under the Puerto Rico Opportunity Zone law, which basically copies the US Opportunity Zone law, gets that 0% tax treatment. The same thing as the US investor. And we can definitely take it offline with the person and we can have a one-on-one call and bring the tax advisors. But that is actually, to be honest, that was what took the longest when we were putting the fund together, was really addressing the Puerto Rico tax treatment and finding a way for both Puerto Rican investors and US investors to invest in the same fund. We heard very clearly from US investors that they would be worried about investing in a fund that only invests in Puerto Rico when there were no Puerto Rican investors. And in Puerto Rico, also, people feel like they're already way concentrated in Puerto Rico. So we didn't want to be dependent only on Puerto Rico capital to put together the fund. So the strategy was to be able to bring in US and Puerto Rico investors into the same fund.
And I'm not the compliance police, but for the record, seek your own tax counsel. Just so I say that out loud. Thank you.
Thank you. So with that, I'll turn it over to Marcelo.
Thanks, Jose. So yeah, fund details. We'll talk a little bit more about the structure, some of which Jose has already discussed, but at a high level here, PRAS was organized as a Delaware entity. So, any limited partners, whether they're in the US or Puerto Rico, invest directly into the Delaware structure. And from there, obviously, the fund in and of itself is managed by Monure Capital Partners, and each of the investments in the fund will be exclusively in Puerto Rico and Puerto Rico QOZBs, which are Qualified Opportunity Zone businesses. Regarding the compliance from an OZ perspective, it's important for me to note that from a compliance standpoint, anyone with capital gains typically would need to make an investment in a qualified opportunity fund within 180 days of realizing that capital gain. From there, the fund will have another 180 days to invest at minimum 90% of that capital into a qualified opportunity zone business with a structured business plan to deploy that capital. And thirdly, there are specific safe harbors at the QOZB level that allow for the deployment of that capital over the course of of consecutive years based on the business plan. Next, I'll walk you through some of our strategy and objectives, a lot of which we've touched on, so I won't dive too deep into it, but I think it's important to reiterate the fact that we are the first private equity fund focused exclusively on ESG investing and exclusively on investing in Puerto Rico. We are structured as a qualified opportunity fund, and what we aim to do is provide diversification away from real estate asset classes into a true private equity vehicle. We've already made 2 portfolio investments, and we have a third deal under LOI. From an investment strategy standpoint, we will diversify, as we had mentioned, into renewable energy, sustainable businesses, and infrastructure throughout Puerto Rico. And I think the key to what we're going to be doing is providing a real active management to these investments, which is why it's super important for us to have boots on the ground in Puerto Rico. Our partners have boots on the ground as well as our network across Puerto Rico is very tuned in. And at the end of the day, what that means is deal flow for our investors. We intend to reinvest all distributions and sale proceeds right back into the fund. Again, this is more of a strategic decision from a tax standpoint. So we can maximize the capital gain treatment at the end of the term. And we are targeting a distribution in 2027 to help limited partners cover their capital gain liabilities. Regarding our objectives, we're aiming really here for a triple bottom line that drives a maximization of the returns, economic growth, and focused on improving the quality of life throughout Puerto Rico. Those are our key objectives. So we're targeting a 15% IRR, married together with some of the local tax incentives and the OZ incentive that we've discussed. we feel that that will have the effect of enhancing your returns significantly beyond our target, but our core target is going to be a 15% IRR. As far as all of the investments we look at, key to our strategy, we certainly believe in that, that sustainable businesses, clean energy and infrastructure investments are going to create stable economic growth. They're going to create jobs. They're going to create tax revenues for the municipalities. So we feel that is a boon to the local economy. We're going to be looking closely at quality of life issues. Again, back to sustainable businesses and clean energy companies. They're going to have a direct impact on CO2 emissions in the local environment. We've enlisted a grouping of best-in-class partners here that are going to allow us really at the end of the day to focus on the activities that impact our bottom line, while they look after and advise us regarding, providing us with the security, transparency, and the compliance for us and our investors. And finally, just to reiterate, target fund structure is going to be, or target fundraise is 20 million. So we're not looking for a large fund. We're aiming for 20 million with a minimum investment of 100,000. It's okay, Jose, you can move to the next slide. Here's a highlight of our team leaders. Unfortunately, Mari Carmen is not able to join us today. However, she heads our advisory committee. She has held prominent positions through at many leading global institutions and is a well-respected thought leader in the local market as well. So we're very happy to have her guidance along with the team. And, obviously extend an open invite as we're looking for anchor investors for the fund. There are openings here for advisory committee for one of our anchor investors. So if anyone is entertaining the potential to invest in Puerto Rico, we welcome the opportunity to speak with you one-on-one and talk about, how this could be structured. Some core details here about the offering, the terms of the offering, most of which we've already covered and talked about. I will note that our GP commitment is a minimum of 1% of all the total commitments that we gain on the fund. We're targeting a 10-year investment period, which realistically will give us about a 13-year term with, different, as we take in capital by way of extensions. Investment strategy, we've gone over renewable energy infrastructure and sustainable businesses. Management fee is going to be 2% with a carry of 20% after a 6% hurdle. So if there are any questions, happy to take them now before Jose jumps into the details of our current investments and our pipeline.
So Jose and Marcelo, can we talk just a little bit about what the profile of an anchor investor looks like to you, ideally, without putting yourself in a corner, and then talk about the capital that has been deployed into the two companies, is how that came about, and how much money you've raised so far, that sort of stuff.
Absolutely. Actually, the next section goes over the two investments we've already made. So I'll cover that. But in terms of anchor investors, what we're looking for is not only capital, but someone that can add value to help us scale up the operation. Someone that will be actively involved in the advisory committee, and someone that can actually provide resources. And when I mean resources, I mean expertise outside of what we're strong at. So having someone that could help us expand our knowledge base will also be key. At this stage, we have $650,000 that has been funded into the fund. And of that, $500,000 has been invested in two businesses. And I'll go over the two businesses now. And we've negotiated the ability to increase our exposure to both of these businesses at the predetermined valuation that we invested at. And that was partly due because of the Opportunity Zone legislation requiring us to invest after 180 days from our first investor. So that capital needed to be deployed, but also as we heard from the investor pool that we were actively talking to, they really wanted to see our strategy. And that's why we went ahead and made the two investments that we're going to talk about right now. So our first investment, which I'm extremely excited about, is actually a local company in Puerto Rico that is in the business of renewable energy products, mostly for residential, commercial, and small industry. Their main products are Leon-Athan batteries, and those are hybrid inverters. And what they basically do is they allow people with renewable energy, and even without renewable energy, to have energy storage at their home. And one of the things that I was attracted to this company was twofold. One, the owner of the company is actually someone that has been in the industry for over a decade in Puerto Rico. And he also was the first person to start bringing Tesla batteries to Puerto Rico and other battery technologies. As he installed those technologies, and he has a separate company that installed energy systems and PV systems, solar systems throughout Puerto Rico. He started thinking that there would be better solutions to the existing batteries out there and inverters. And he started looking at what were the challenges. One was how long it takes to install this equipment. The other one is that you're normally putting together different types of equipment. The inverters is one brand, the battery is a separate brand. And a lot of it gets updated by software, basically Wi-Fi enable them to keep upgrading the software. And he was starting to have problems with clients calling that maybe the battery software got upgraded and not the inverter, and things were not always working properly. So with that in mind, he came up with the technology. He developed it here in Puerto Rico, and then he went to China, which is where most of it gets manufactured. He manufactures in China, brings it to Puerto Rico, and has been doing this since 2020. I met him through mutual acquaintances. Actually, I started talking to him about his other company. And when he introduced me to what he was doing with Sunbeat Energy, which is the name of the company, I got pretty interested. Spent about 4 months with him doing not only due diligence, but trying to understand the technology, trying to understand the differentiating factors, and more importantly, trying to understand the business model and how much capital he would need to do this. So we went ahead and made the investment on October 25th. That was the first investment made by the fund. We have an opportunity to invest an additional $1 million at the existing valuation that we did. And at that point, we will also have a board seat on the company. One of the, besides the, I mentioned already, if you think about installing one of the systems, sometimes it could take a couple of days. If you use the all-in-one, I'll move to the next slide. If you move to the all-in-one energy system, basically they could do this in a couple of hours. Also, this application could be used in a condominium, assuming that you can charge it with the regular electric outlet, so that when your power goes out, you have a battery that you can use. So there's a lot of applications that we haven't really gone after, or the company hasn't gone after. And we're really excited about the opportunities. Recently, they signed a contract to sell enough batteries under that contract to meet our budget, half of our budget for 2022.
Yeah, I'm sure just a real quick question, that also can act as a back out for the brownouts, right?
Yes, absolutely. And that's the idea. When you think about a PV system, you have two issues. One, if you don't have the right type of inverters, sometimes you can't even use your solar power if the actual power, your utility power, is not on. And that's something that happened in Puerto Rico. When the hurricane came, most of the people that have solar system were not able to use it. So there was a big push to get batteries and to get the right type of inverters into Puerto Rico. But the second part, and to your point, is with PV, when the light is not going, you don't get any electricity. So this is a way to have electricity at night, and also to optimize your PV. You don't necessarily need to have PV to always hit your peak. So this is a way to more efficiently have backup power, like you mentioned, Arthur.
Yeah, great. Super cool.
Our second investment actually came purely from networking and from being able to provide the type of advice that we do and expertise. This is a company that I have been in touch with for over a year and a half, mainly because we spoke on the same circles. We knew the same people, and in many of the conferences, they spoke right before me or I spoke right after them. And maybe about 4 months ago, 5 months ago, I met them again, and they invited me to come over for a tour of their facilities. It's fairly straightforward. They're basically doing what they call, or what is called aquaponic farming indoors, and they're also doing in a vertical procedure. So all of that put together creates a significant amount of advantages, not only to traditional farming, but also to traditional indoor greenhouse farming. I'm not a technical person. I really look after a management team that has the expertise, and that's what the team that put this together does. I bring in helping them with the financial side. They do have a CFO, but I do have a lot of experience helping them also with the renewable energy system that they're going to be installing on their existing facility. Just a couple of the highlights of what made this attractive to us. One of them is that they have already contracts signed for 100% of the output of their first 2 facilities. So that's something that gave us comfort. They have been selling, they have been growing and selling the produce to one of the grocery stores of the chain that will be buying this. And they have been selling it to supermarkets and retail at their facility. They basically can grow 9 to 12 times higher yield than you would do on traditional farming, and they can do that with 90% less water. So those were things, again, from the ESG perspective that made the investment attractive to us. In addition to food security when hurricanes come, and the fact that Puerto Rico imports most of its food. The other item that I was very attracted to was the ability to scale this up. Right now, they were doing this in a 20,000 square foot building, but only using about 1,000 square feet. So our investment goes to help them expand and finish the build out to go to 20,000 square feet operation. So they're going to be producing 20 times what they're currently producing, hopefully by the end of this summer. Again, what we have tried to achieve here was bringing our expertise to help the company do better, but leaning on the management team for everything that has to do with the technical side on both agriculture, but also on the technical side of selling the product. The third investment that we have on our pipeline, which we have not closed, is one that we have been working with for a very long time, over a year. It's called C Combinator, and in particular, they are in the business of trying to find ways to improve the environment by taking care of the problem with sargassum. Sargassum, basically algae. It has become a bigger problem over the years. Most of it comes from Africa, and it comes and goes through the Caribbean and ends up in Mexico. And this company is at the forefront of trying to solve that. I met them when they were coming to Puerto Rico. They have already in Puerto Rico R&D lab. They were originally going to do their operations in Mexico. They do have operations in Mexico, but when they were looking at investing on the manufacturing facility, on the what we call the high-end processing, they decided to do it in Puerto Rico, not only for tax reasons, but also because of having US law, also because of the location in order of where they're going to expand, but mainly because of the need for scientists. And right now, most of the scientists that they have came from the market in local market in Puerto Rico. Briefly, this is going to be a structure where we have the right or the opportunity to invest in the Puerto Rico business. So in order to qualify this for an opportunity zone, we would be investing at the Puerto Rico entity that the company owns. And our proceeds of our investment will go to actually build a manufacturing facility. They are working on the last stages of finalizing their first product, which right now is expected to be an emulsifier that will be used in cosmetics. From a pipeline perspective, we're very bullish and we think there's a huge opportunity on renewable energy in Puerto Rico. This is how we started. This is our expertise. But a lot of these projects have taken much longer to develop. But because of the Puerto Rico Act 17 that we already talked about, basically it is expected, and there's already been what they call an IRP, which is the Utilities Integrated Resource Plan, that governs the need for the utility to go and seek basically 3,000 gigawatts of renewable energy. 3 gigawatts of renewable energy, and then battery storage. Basically, the first tranche of this already went through, and yesterday, the Public Utility Commission approved, and this is as recent as last night, approved 18 projects. So we would expect that those 18 projects should start construction sometime in the next 12 to 24 months, depending on their development timeline. And that will start what I would hope is a huge investment opportunity for investors here on the island. Looking at rough numbers, the total 5 gigawatts, when you include both storage and PV, it's over $5 billion of investment. Tranche 2 is already a little bit delayed, but they announced they've already having stakeholder meetings. So we expect that sometime during the month of February, the tranche 2 for the RFP will come online, and that will provide another round of power purchase agreements and projects. But in reality, we're also really focused on what we call the commercial and industrial. Because of the prices that you saw for electricity, because of the brownouts that we have constantly in Puerto Rico, many of the industrial players and the commercial players are looking to put in either cogeneration or also renewable energy. And that's a space that is perfect for us, given the size of the deals, but also given our expertise and experience. So we would expect deals in what we would call $1 million to $10 million to be readily available. And those will not be the utility scale deals that will normally be more in the neighborhood of $50 to $100 million each. We expect that the utility scale deals will most likely be for a second fund after we have proven our first fund, and we have done it with more of a commercial industrial projects. When we talk about ESG impact, I mean, you can see it here very, very clearly what Sunbeat Fusion Farms and C Combinator will be doing, not only from an economic activity, but also from improving quality of life and the environment. I mean, we're talking about having less CO2. We're talking about being able to provide cheaper and cleaner energy. And we're talking about providing food security for Puerto Rico, using less land, using less water. So when we talk about ESG, we're not just using that to throw a label. We really mean that our investment strategy is addressing some of each of these issues that we put here: economic activity, quality of life, and the environment. So Arthur, we're gonna move to go over a little bit more detail on the opportunity zone, the legislation, and how it works in the US and in Puerto Rico, but I wanna see if there's any questions before I turn it over to Marcel.
The question I have is, when do you see yourself going into the second fund? And it's just probably too early to tell.
It's too early to tell because it depends on the type of investors that we get as anchor investor. Obviously, we will be keen on having co-investment opportunities if we get a large investor. So we're not at all looking at a second fund. The reason I suggested that is because when we're looking at projects that are $100 million, we're not saying that that's going to be for this fund. However, that is a market that we're in, and we monitor that market and we work on that market. So we're just showing ahead what the possibilities are for Puerto Rico. From our perspective, we're going to be managing this fund for 10 years. The way that the limited partnership agreement works, we would have to have invested over 75% of the committed capital before we move to a second fund. But in reality, because of the way that opportunity zone legislation works, and we have to invest the capital within 180 days of the last closing, technically we could start raising another fund within 180 days of the last closing. But our goal is to actively manage the investment as well. So even if we are moving to a second fund, we would still be actively managing the, and we would expect to continue to reinvest that capital in the extent that there's an early exit from one of the portfolio companies.
Yeah, you just might find that it's, rather than rolling into the existing fund, roll it for everybody's benefit into a new fund, depending on.
Absolutely, and that's when we talk about how you would exit. Basically, one of the opportunities for the fund to technically not just buy the partners out, but actually get capital to continue the fund going forward.
Yeah. So before you go into this, we've actually run out of time, but so we want to be polite to our guests. Can you talk a little bit more, even though you've covered it, but just be clear about, okay, if somebody's interested in looking under the hood here, what exactly should they do?
So if you're looking from our perspective, we're a fully operating fund. We have our accounts all set up. We have investors, limited partners already here. What we're trying to do is bring an investor that could come up with $5 million to give us enough scale to operate and continue our fundraising. Most of our fundraising to date has been high net worth individuals. And what we're trying to do is scale that up so that when we continue fundraising, which is what we brought Marcelo here to do, and I can continue investing and managing the portfolio. So we will discuss with those investors a break on the fees or even an investment in the management company and carried interest, depending on what that anchor investor would prefer. We have a full PPM on all of the detailed information that we can make available to any investor that's interested. And we're more than willing to, and we welcome the opportunity to do one-on-ones with any investor interested in a detailed discussion. Yep. These slides that we have here were really for reference only, so anybody can look at them and can ask us questions. It was just going to go over the simple, opportunity zone 101. That's it.
Yep. Marcelo, what's the pushback, if any, from the discussions you've had with investors, and what types of things do they really like? There's always pushback on something, right? But just to give the group an idea of the things that they ought to be thinking about.
Yeah, thanks, Arthur. I think that when it comes to pushback, what it is really it depends on every investor's profile, right? As far as their risk tolerance and what they're looking for, which is why we're trying to be very specific about what we're looking for. I mean, we're really looking for investors that align with our interests when it comes to, the type of returns we're going to be delivering, which we feel are very competitive market rate returns. With the added tax benefits, along with, driving impact across Puerto Rico. So I think if we can find, once we align with investors in those three categories, the conversations run smoothly. It's for, when you find any kind of resistance, it's really just, looking at investors that are more comfortable, let's say, with real estate or with a fund investing or diversifying across, let's say, the United States, which in fact would, just doesn't align with what we're doing. So it's not, so that's sort of the conversations I think that we've had where people kind of are exploring the opportunity, but not more or less understanding what the opportunity is in Puerto Rico or that committed from an investment standpoint. So the people that have invested with us, I think it's been a rather easy decision in general, right? Because we hit all the the right, we check all the right boxes when it comes to what they're looking for from an organized fund, from the sort of safety, security, and oversight we provide on the back end. And obviously, I think first and foremost, the level of experience and expertise that we bring to the table, especially throughout Puerto Rico. So yeah, it's, I welcome conversations with anybody, but ultimately I want to be very transparent about that aligned interest, right? And that's the type of conversation we're looking for. That's the type of investor we're looking for. Someone who is sort of, knowledgeable about these opportunities and obviously committed from an impact and ESG standpoint to move their money somewhere where, it would, have a general, strong impact on the economy and the people of Puerto Rico.
And the benefit of the rule of law, right?
Absolutely.
Yeah.
And Arthur, I'll give you the other reason, which is why we're here today. A lot of investors are concerned about the amount of capital at the fund level, right? Right now, as a general partner, we're covering all of the overhead and fund expenses. And that was my commitment to the first investors. I wanted to make sure that while we're doing the fundraising, those first investors would not be, hurt from a financial perspective. So the ones that have done it because they have conviction, because they got to know us, and because we also provide them the comfort that I will be managing this fund for 10 years, regardless of the amount of capital we have. I have my own capital. So, if it happens to be a $2 million fund, we're going to be committed. However, we have tons of investors that as soon as we get to a reasonable size, which is what we're trying to get that anchor investor, they're all ready to invest. I mean, I understand their hesitation, but I've been able to get sufficient limited partners comfortable that I will be managing the fund for the next 10 to 11 years, regardless of how much management fees we can get out of the fund. And we'll look for ways to minimize any third-party cost.
Totally, really important point. Being that you're independent of what happens, you're still going to be able to manage because you have your own capital. It's really an important thing. So with that, for the group, please think about not only your interest, but others that might be an anchor investor, because it's clear that would be helpful for everybody, even you as an investor, bringing in an anchored investor and helping things along here. That would help the cause right across the board, I think. We do need to wrap it up. Thank you very much for doing this, Jose and Marcelo. Nice to meet you. And I'll say it again, I'm buying dinner when I come back there, and I hope it'll be soon, because this morning we drove out and it was 3 degrees, 2 degrees, 1 degree. So we're anxious to get back into the Puerto Rico sun. So thank you again. Thank you for the group for attending and sticking with us through beyond the hour. And as I say always, that thank you for spending the only thing you can't make more of, and that's your time with us today. Thanks, guys.
Thank you.
Thank you.